Yo, what's up, guys? Today I'm about to be doing a trade breakdown of how I caught this snipe, and I actually caught it on five different accounts. So, obviously, my funded account that you guys might have seen the video that I just got a payout from, and as well as these other four combine accounts that I said I was going to do. It's like the second phase of my plan, getting four more and getting the max allocation. So yeah, I'm gonna prove that real quick with this account page right here. So boom, 4.185k about, and then on the other four accounts 4.165. That's just because of the trade copier. It's a bit of a delay after you place an order, but yeah. So the main point of this video is breaking down how I got 4k on five different accounts. And the way I did it was basically through obviously daily bias and obviously using ICT concepts. And yeah, so basically, I'm going to show you guys what I saw going into the day. So first, this is the 4 hour time frame. This is at 9:30. This is like a screenshot that I take at 9:30. So this candle isn't closed, so it's not 10 a.m. yet. So yeah, basically this on the daily time frame, there's an order block here. As you can see on the 4 hour, it's a bit more spread out. But if you guys go on the daily yourselves, you guys can see what I'm talking about. And yeah, obviously I take the screenshot on the most relevant time frame, but I have to mark out other time frames such as the daily and the 1 hour sometimes. But yeah, so daily order block, we have a rejection off of that point. Okay, so it's showing somewhat bearish signs, but there's a 4 hour fair value gap here, and we bounce off of that, but we actually don't go or even like wick, but especially close above this high, and we don't invalidate this order block. Then we continue going lower, and as you can see, we create a 4 hour gap over here. We enter it, and now we start rejecting off of it. We don't close above consequent encroachment, that meaning that we respect the 4 hour gap. So all of that leading to basically a bearish bias into the day. However, like I say in this, I have to be very careful on how I take these setups going short, since we're inside of a 4 hour fair value gap that we didn't disrespect yet. So keep that in mind when I talk about like my executions. So now in the 1 minute, what do I see? At 9:30 over here, we move up, which is what I like to see if I have a bearish bias, and we take out minor liquidity as well as enter into a higher time frame imbalance. So in this case, it's only a 15-minute fair value gap. We also tap right into this 1 minute gap over here. I think it's actually the first fair value gap after 8:30, which holds more significance, but I don't really trade on that. But it's just good to know if you guys do use that in your trading, as well as we close respecting consequent encroachment of this higher time frame fair value gap. So when I see that and then displacement lower, okay, that's when I'm starting to look for a setup. So as you guys know, if you guys watch my videos, I wait for two things to happen. So a fair value gap slash order block, basically a PD array to get entered into, plus a breaker. There's always has to be a breaker on how I enter. Now I'm about to put you onto like a gem. I don't know if I was supposed to, if I should say this, but this is how I enter and this is how I get these sniper entries. Right? Hence the name. You know what I mean? So yeah. So this is how I do it. Basically, I always look at entering at the second opportunity of entrance. So the three opportunities of entrance are the entrance into a fair value gap, the consequent encroachment of a fair value gap, and the breaker block. So as you can see here, we tap into the first one, which is the start of the fair value gap. The second one, where I enter, is consequent encroachment. Then the third one here is the breaker. Okay, if the breaker was below the consequent encroachment like this, I would enter at the breaker since it entered into the fair value gap first, then the breaker. And if the breaker is below the fair value gap in its entirety, I would enter right at the start of the fair value gap. I find that way you don't really miss basically any entries and you always get the most optimal entry. On a bigger fair value gap, like if the fair value gap was wider, like this, it would play even more of a difference and you would get a way better risk to reward if you enter the way I do. So yeah, that's just a little gem for you guys there. Instead of just entering right when it reaches the first point of entry. So yeah. But yeah, so that's how I got the sniper entry. Now, how did I get the sniper exit? So basically, after entering a consequent encroachment here, we see a huge move to the downside. Now, some people will say, oh, why don't you just exit here? This is clearly like after a big move down, this is a major low, and you always talk about exiting at major lows. Yeah, but don't forget the daily bias that I just showed you guys. So going to the day, what are we looking for? We're looking for price to go lower and at least go to the bottom here and basically confirm the rejection out of this fair value gap. Or else, what's the point? We're not going to just go up a little bit here and then we're going to take profit here. That doesn't even have anything to do with our entrance. So you have to like look at context basically. So what are we looking for in the grand scheme of things? We're looking for price to go lower and to take out this low over here. You get what I'm saying? So it confirms the rejection, which is our initial idea on the higher time frames. So that at that point, obviously, we have to scroll to the left and see where's our point that okay, that's the minimum we could reach, and that's this major low over here. Now, if you're greedy, you could go for this one, which is the other candle, right? This is obviously the London session low over here, and this is before that, prior to the London session. But yeah, so I always take it at the major liquidity. That's obviously reasonable. This, if you consider it a major liquidity, because there's so higher lows, lower lows, and all that, and then the opposite going up, you might consider that a major liquidity. But how I view things is I have to put it into context. So yeah, that's basically how I got the sniper entry. Of course, you guys know why it's a sniper entry. It's basically the best point you could enter at, and basically the literally the exact best point you could exit at. And I know some of y'all are probably fucking thinking, like, oh, what if you put like the Fibonacci here, and then you checked the midpoint between these gaps, and then you checked the quarters, and then you could have exited at the first quarter. I'm like, bro, that's the dumbest shit I've ever heard in my life, bro. So this is the realistic sniper entry, alright? So don't fucking come at me with all this bullshit, bro. And oh, you could have entered right at the midway point between the breaker and all. Nah. This is like the best that you're gonna ever fucking get. So don't be greedy, okay? Don't be aiming for extra liquidity here. I see some people, even if we reach the lowest low, they put it a bit lower to get extra risk to reward. But that's not what it means by being a sniper. It means taking the perfect entry, like the perfect calculated entry and the perfect calculated exit. So that's basically what happened in this trade. And yeah, so if you guys got any more video suggestions, you guys want me to talk about certain concepts, or maybe like more IRL videos you guys want to see, or anything that you guys want, leave it in the comments. I always answer to basically every single comment. And yeah, so I'm about to see you guys later. See you. Peace.